my money ready. It's a crazy world, and I need that money ready.
Welcome back to Houston Life. If you are self-employed, buying a home can get tricky because most mortgages are built around pay stubs. And at tax time, those write-offs that help you owe less can also make it look like you earn less to a lender. Here with what you need to know before you file is Rich Bond, a mortgage expert for self-employed with Habayet Home Loans. Hey, welcome back. It's nice to see you.
Man, it's great to be back. I had a great time last time, and I'm really looking forward to today.
Well, I've told you before, I wish I had known you 15, 20 years ago. I already had a mortgage that I had secured when I was a W-2 employee. But then once I became a freelancer, I thought, you know what, I can't sell this house because I'm not going to be able to buy another one. You help people in exactly that situation, people who have been told no by other lenders.
Yeah, absolutely. That's my jam. You know, we love to help folks like that. And right now, this is the scariest time for people who are self-employed because they're about to get the most expensive piece of advice ever. Pay more in taxes, forego your deductions, and wait until next year.
And a lot of people are in that situation, right? I mean, we're talking freelancers who are often paid on like a 1099, right? Self-employed people who maybe on paper, they need every deduction they can get when it comes to tax time. But when it comes to applying for a mortgage, a lender might say, hey, sorry, you just don't make enough.
Most of your big box lenders and your banks, they don't understand anything other than line 31 of the tax return. That's how much did you make? That's all they understand, and they don't look out for outside solutions. We take a look at real money. We look at the cash flow. We don't look at the fantasy that the IRS has allowed your CPA to sculpt. And the reason we don't is because we know that there's a story there.
Rich, I was thumbing through the book earlier, and you give an example of someone who's self-employed. Their adjusted gross income looks relatively low, but when looking at their bank accounts, this woman was actually making a ton of money every single month and every single year. So what's your message then to people in that situation where maybe they're an independent contractor and they're about to file their taxes? What do we need to be aware of?
First and foremost, we're going to be having a webinar on March 26th at 7 p.m., where we're going to be talking about the things that you need to know before you file. But don't give up your deductions. Don't do that. You don't have to. There are programs that are out there that will help you gain your home and not lose all of those rightful deductions that you've taken. There's no reason to feed the government piggy bank anymore. They've got enough. They've got enough. They could spend less, but they've got enough. So you keep the money, you keep growing your business, you keep creating jobs, and you get your home.
I feel like at the heart of what you've brought us every time you've been here on Houston Life is that traditional mortgages are tied to this idea that in order to qualify, someone must be a W-2 employee. Getting a W-2 at the end of the year when they file their taxes, it's just right there on paper. But there are a lot of people out there working, earning a living. Maybe they are a small business owner themselves, or maybe they work multiple jobs. Your message is, for those people who have been told no, they should call you and you'll help them find a path.
Absolutely. We look at all different methods, whether it's using your assets to qualify, looking at 1099s, your profit and loss, 12 or 24 months of bank statements. We can find a way to help show your income in the way that the system wasn't designed for, because the system wants you to live in a little box. But more than 36% of the workforce is self-employed. When you add people who've got gig economy jobs, and you're looking at that, you're almost at 50% of the workforce.
Yeah.
The box is not designed to help you, so let's break out of the box, have a great time, and get you a home.
I love it. I love that spirit. Okay, let's talk about the FAST method. This is something that you want self-employed buyers to be aware of, essentially helping them get their ducks in a row if purchasing a home is on their goals list.
Absolutely. And can I tell you something about the FAST method?
Yes.
This is the first time it's actually being discussed publicly.
Oh.
So we're premiering the FAST method with you today.
I love that. We love an exclusive. Okay, so what is it? Break it down.
Okay, so the FAST method, what you're going to do is you got to find the right loan. And this means looking at how we're going to document it. We're going to apply for the strategic pre-approval. This is what's going to make this possible for you. We'll help you secure the right home and then take away the keys to your castle.
Okay. I mean, you make it sound so easy. Are there things that you see, Rich, people doing that are like a total no-no? Like, let's say I'm a self-employed person. It's tax time. I'm about to file my taxes, but sometime during this year, I want to buy a house. Is there a common mistake that people in my shoes are making?
Absolutely. The common mistake is listening to the loan officers and the realtors who say, oh, you can't write anything off because you won't qualify. So you're spending tens or maybe hundreds of thousands of dollars paying extra taxes because somebody doesn't understand all these other paths.
That is not a good situation. I mean, I'm floored. And also, I mean, a lot of banks will have built-in like mortgage officers, right? Is it a bad idea to just call a mortgage officer at a bank? Because they want the bank to benefit, right?
I don't want to say it's a bad idea to call them, especially if that's your thing, but they're probably not going to have the tools that we have. They don't understand this type of income. They're underwriting from a tax return only. So if you want to spend your down payment on taxes and not be able to buy a house, or would you rather take the tax savings and use that as a down payment? Now, we're having this webinar. You can register at savewithrich.com. And once you register, I have a calculator behind there that can actually show an example of how much you can save in taxes versus how much extra interest you'd be paying based on your own personal situation.
Okay, well, do not pay more in taxes. That is a great takeaway. Rich Bond, we're out of time. Thank you so much for stopping by. 30 plus years doing this in the mortgage business. I wish I had known you 15, 20 years ago. But anyone out there who's freelancing, self-employed, register for that webinar Rich mentioned today. SaveWithRich.com, or give Rich and the team at Habayet Home Loans a call, 281-841-1723. It's always a great conversation with you.
It was a great time. Thank you.
Thanks for stopping by.
Pleasure.
All right.